Using record. Okay. Force is 80 for TP, 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 TP. Force is 80 for TP. Yeah, for TP, yeah. So that's just 1:2. 1:2, basically. All right. So, so that is it. 1:2. But I am holding personally, yeah. I'm holding till yeah, till force is 35. Right. Now if you ask me why, this is why, right? This is why. Um it might even get done a little bit. So what I'm doing here is um trading the pullback. Of course, we've had our consistent downtrends here, right? Then of course yesterday, um Tuesday rather, the market broke the 4 hours high, hence switching this trend to an uptrend. All right. So what I'm taking advantage of here is the pullback. The pullback has always worked on the 4 minutes on there's always worked for the reversals. That's what I'm taking advantage of here, yeah. So I'm trading the pullback to the 50% level. All right. So if I go from this low to this high, it's giving me a way lower price. More, which given it time, right? It will say drop to, and it's still a valid area. It will say drop to 4,612. Okay. But I walk to this low and this high, giving me 4,635. All right. So this is what I'm working on for the full pullback. All right. So you might want to leave, you might want to allow it to run. Maybe you have two entries. Once the main 1:2 RR hits, you can now leave the rest to run. Make sure it's risk-free, break even, allow it to run, right? So that is what I'm looking at. Then also, back to this. Um, I actually took a loss this morning anyway. I was seeing a clear sell, but I wanted to take my TPs around 4718. But on the 1 hour time frame, you can see a clear um double top right here. So this is like a clear sell signal. Right? I marked this. I was hoping the market would want to come up a little bit, but I lost that trade. Yeah. So given that this has given us a new low, right? And of course, new low broke this one still, came into this area of interest. Of course, the market will want to push up a little bit. The SL 4710, 4710. Yeah, this is so. Now, why am I choosing this point? I would have already chosen this whole area here, but there would be no really need for that because um look, this is my verdict. So if you think otherwise, just feel free to um drop your comments here. This is an FVG. In fact, this a what's it called? An inverse inclined, was it inverse FVG, right? Which is quite, you know, this is where I would have I took my buy here. It's crazy. This is where I would have actually sold, right? Okay, no, it was at this point. Yeah, I took buys around here instead of selling. Okay, so it's crazy. So we had this area respected like thrice before giving us this push down, right? So I was looking at, I think yeah, this was my SL 4698. It was roughly, roughly 8 points, right? 8 points, 8 points, stop loss. Okay. So I got taken out. I knew somehow that this area will be respected. This that the market will want to tap into this area first. But it happens. You're on a trade and you're thinking so many thoughts at the same time, right? So on the 5 minutes it actually makes sense that it's going to tap into this area before pushing up a little bit, right? So that push up is this APG right here that I marked out. I'm careful, okay? We have a new person on the call, so I'm careful to just once I have new persons on the call, I will switch to the actual plan I have for the day, right? So Richie, good morning. I know you might not be feeling whatever I'm saying right now, but Henry and Fortune does. So for your sake, we'll talk about what we're supposed to talk about today, and that is capital protection, right? Capital protection in essence has to do with your risk, right? In all whatever we do in the trading markets, yeah, the most important thing is um the most important thing is protecting your capital at all costs, right? Protecting your capital at all costs, right? Because that's what keeps you running. If you blow it, unless you have an unlimited supply of funds to keep donating to the market, if you don't have that, and of course, it's not even so wise, basically, right? So unless you have a limited amount of funds, it's best, even for your mental health, right? For your psychology, yeah, for you to protect your capital. And for that, you need to determine the amount of risk you take per trade at any point in time, right? So we'll talk about that in we'll break that down right now. Yeah, break that down right now. Now, it also boils down to your analysis, right? What kind of analysis do you do, right? If you're the type of trader that shoots for 1:3, 1:1, 1:2, no, like there are some trades you see is like 1:2. I don't, what you're risking is more than what you're gaining. It's crazy. Now, if you continue with that kind of approach, give yourself a particular time, you would lose out basically, right? You lose out basically. All right, you lose out basically. Now, I checked my my history. Yeah, I've taken lots of trades, but my accuracy is below 50%. But thanks to God, I'm quite profitable. All right. This is spanning from um for like few months now, or let's say in the space of 1 month, basically. And my accuracy is below um 50%, but I'm quite profitable, right? Now that to debunk the idea that you need to have high accuracy to stay profitable, right? You need to have high accuracy to stay profitable. No. Once you have your correct risk to reward and appropriate, just like I was speaking with someone, right? You cannot risk, you cannot risk, um, let's say, you cannot risk, let's say, 2% of your account on a particular trade, right? Perhaps lost it because a loss. Then on your next trade, instead of risking the same 2% or maybe stepping down a little bit, you increase your percentage to 4 so as to make up for what you lost. You're shooting yourself, actually, right? Because you get to encounter another loss. Now, but look at this. Yeah. You maintained a consistent 1% risk on every trade, regardless of win or loss. Of course, maybe for trades you're not so sure of, yeah, you can reduce your risk. For trades you're so sure of, you can increase. But let's say on average, you're maintaining 1% risk per trade, right? So 1% risk, and you happen to have, let's say you aim just 2 RR, 1% risk with 2 RR. When I mean 2 RR, I mean 1:2 reward, right? So let's say in 10 trades, right? In 10 trades, you had a 30% accuracy. As you, it's crazy, right? You won 7 trades. That means in 10 trades, 30% accuracy, that's 30% accuracy. Because we are doing the maths here, and this maths actually helps on the long run, right? 30% accuracy, you won 7 trades. Sorry, you won 3 trades, right? Lost 7. So if you're risking 1% and your wins are 2 right? So for your wins equal 3 trades. Wait, let me move this to uh, your wins equal 2 times 6 or 2 times 3, right? 6%, right? This is a fatal accuracy in a way. It's like a very bad accuracy, but it's all good. Then your losses equals 7%. So can you see how this detrimental accuracy kept you just 1% drawdown, or let's say 1% loss? Now imagine if you have an RR of, let's say, 3 RR, right? Let's say, 3 RR. Your wins becomes 9%, 9%. Your loss, the same thing. All right. So just an increase in RR with 30% accuracy, you're still profitable. You're still profitable. Are you seeing that? So sometimes it's, when we talk about capital protection, it boils down to the risk. It boils down to the risk. So I just needed to lay this out so that you can understand, right? And to lay this out because it's not about, because you can be in a winning environment, right? You can be, let's say you're in a community, trades we took this week, supposedly you're supposed to be in profit, but you're like, I'm on a break even, or I'm actually negative. Like, what's really happening? In fact, there are so many factors here, but let's break it down little by little. Okay. So first things first, um, there are certain approach to this, right? Time is fast spent, but so your first job as a trader, right, is not to make money. It's to stay in the game as long as possible. That's your job. It's not really to. Yours is to, a month down the line, 2 months down the line, or even weeks down the line, are you still in the game? Or are you the type of trader you fund in a week you've blown? You fund in a week you've blown. You give yourself 2 weeks of practicing again on your demo account. You go back, repeating the same process over and over and over again. In fact, that process, that's back and forth alone self messes with you. Now, most traders here focus on profits, right? Professionals focus on capital protection, right? So you protect your capital first because without capital, there's no next trade. Your capital is like, you saw with me here. Your capital is like the lifeblood you have for the trade, right? And so many things affect this, apart from your risk to reward, yeah? Your emotions, over leveraging, revenge trading, poor stop loss habits. You are so fearful. Oh, market moves few points, boom, you are just, oh, anyways. Well, let's start with risk to reward, yeah? Few things we can to help you with this capital protection. One is your risk to reward ratio, all right, and the correlation to profitability. which is what I actually explained here. All right. How much are you risking? How much are you aiming to gain? Because on the long run, it actually affects. Okay. How much are you risking? How much are you willing to gain? So you don't really need a high win rate. All right. You don't really need a high win rate because proven systems, even your strategy, whatever strategy, any strategy it is you have, no strategy promises, any strategy that promises 100%. I think that would be a fallacy. Yeah, you need to look deep. Nobody, nothing, right? There's no 100%. In fact, if I'm having a strategy that's been giving me consistent wins, I'll start like I need to have loss so that it balances the equation because there's what we call dependency. Let's say a particular strategy gives you this win back to 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 back. You become so dependent, it erodes certain things you need to, let's say, um, you know, there's, I won't talk about so many things. There's what we call, they say, um, the effect of winning streak, yeah, is more detrimental to a losing streak. Winning streak makes you careless, less risk averse. Yeah, you don't really put so many things into it. You're like, oh, you know what? I know I can win this. You just go in, you just go in, you just go in. If you become that so dependent on a particular strategy that gives you that kind of wins, you won't put sometimes you can, you know what, I too trust this trade or I too trust this strategy. You go all in with some crazy risk. The day it will fail, of course, it will fail. You're like, what's happening? The day you might possibly blow your account that once, like when you encounter the day that particular strategy fails, right? So what I'm saying here is that ensure your losses are smaller than your winners, right? This keeps you in the game long enough, right? Bad RR actually destroys your account. Okay. Bad RR actually destroys your account at least minimum 1:1.5. 1:1.5 is like the first I dropped an idea here, yeah. You're risking 10 points to make 15 points. Right? That is 1:1.5. Going down to 80 points. So going down to 4,680, that's like 20 points is 1:2. Right? So that is what it is basically. Now, next is adjusting setting adjusting stop losses. Right? Of course, a stop loss is, simply limiting your losses in the market. Right? Stop the loss. It's not a bad day. It's simply stopping the loss. Some persons are so scared of stop losses, but these guys are your friends, basically. You're in a losing trade. You're like, okay, stop this. This amount I can take for the day, or this amount I can take for this particular trade. All right. So, um, next thing is proper SL. You don't do random, you just rush into any trade, put a random SL. Like how? Everything has to be with structure, right? Like I said, I built on a reason why this stop loss is where it is. You don't just pick any random thing, or you're like, everything has to be structured, yeah, right? Because when the stop loss is too tight, you're stopped out prematurely. That's why sometimes you get like just like which day was that? There was a particular trade we took. Yeah, I adjusted the stop loss to like 344, 4634 thereabout. The market took us out. Then went ahead to hit our TP. You see that? That was a premature stop loss adjustment, and we paid dearly for it. We missed out on a very good 15 points or 18 points thereabout. Okay. And if it's too wide, that's too poor. Because there's a possibility that the market, so there's a possibility um that the trade becomes invalid. And when it becomes invalid, having that wide stop loss is so meaningless for you, right? Why allowing yourself to get stopped out above this area when you can just get stopped out here, right? So that's why your stop loss areas are areas where you know that if this market breaks, there's no need being in the market again. All right. If this market breaks, there's no need being in the market again. All right. So that's why that's why when it also comes to stop loss trailing or trailing, yeah, stop loss trailing stop loss. I don't just keep shifting. I keep it at areas where I know that if if it crosses here, no need. It's gonna take me out, like even at break even or my main stop loss, right? So you don't just chase chase it like that. All right. So let's say for we took a sell here, right? Your stop loss should be above the resistance or the swing high. Now, this move here would actually make sense on the 1 minute time frame. Now, look at the 1 minute time. I know there are so many lines here. I want to explain all of this, but okay, let me use this one instead. 1 minute time frame. All right. So this is we entered at 4.7, right? This will enter this trade at 4.7 is running. Now, normally the swing high, this is like in fact, a clear swing high is this point, 4710, our SL. On the 1 minute time frame, this is a clear double top, signaling a strong sell, right? So we entering at 4.7, another low key double top as well, and having this area here as our SL is actually very valid, right? Someone can actually use these other swings here as theirs, but this one looks most valid to me. Okay. For the 5 minutes, you can see it's clear as well, right? There's no need shooting for this point where you can use this area. Now, what makes this area valid for a potential stop loss zone or a potential swing? This is a high, this is a low, this is a clear high, this is a lower low. So if this market breaks this high, there's no need. We can say that the trend has switched, right? In fact, we have another high being created here still. Right? We have a low, we have another high here. All right. So this is still premature anyway. But I'm still looking at this market dropping to this point, coming back again to do another pullback and keep selling. All right. So back to what we're talking about. All right. So another important concept here is market structure based stop loss. Right. You can just say, you know what, I'm entering this trade at this particular point. I'm only risking 10 pips. Whatever 10 pips is going to give me, that I'm risking 10 pips for 20 pips. I'm risking 20 pips for 40 pips. Understand? This is market structure. If I get taken out, the my um oh wait. What I'm trying to say is that avoid, right? Avoid the market structure. Avoid what's it called? Using, okay, you know what? I'm just risking 10 pips for this trade. That particular 10 pips can still be within an invalidation zone. Let's say you entered, let's say you got late in a trade, right? You got late. Let's say instead of entering at 4.7, you entered at 4.695. And you're like, you know what? Since those that entered at 4.7 are risking 10 pips, I risk 10 pips too. Now bringing your stop loss to 4.705. I suppose you this market coming back here and taking you out, right? So the best thing to do, instead of using that approach, the best thing to do is, to what point is my trade invalid? Or at what point is this setup invalid? Okay, you're looking for a downtrend. If it breaks, of course, downtrends are lower highs, lower lows, lower highs, lower lows. If I see a higher high, it's invalid. So my stop loss has to be at that point that if it breaks, that's an automatic higher high. That means I should be out of that trade. I'm doing nothing in that particular trade, right? I'm doing nothing in that particular trade. And I think then there's also the break-even concept, right? Break-even. Moving SL to protect capital while allowing continuation, right? That one, just like I said here, is more like a trailing not really trailing, but it's an approach where when the market has made, remember, I said this point is still immature. Now, when the market, I can decide to set a break even once I see this low broken. Once I see this new low broken, I can set a break even on my trade. You understand? So break evens are actually optional. It's not a must. You can always set it, right? Man. Then there's trailing stop loss, right? Trailing the price of the movement to secure profits progressively. I got them profitable stop losses. All right. So let me see if I can get this market has been trending so hard. I want to see a progressive. Okay. So let's say, uh you saw this flag, you waited for the market to break out, did a retest, you entered here, right? Market moved, gave a new high, right? Did a pullback, gave another high. You adjusted your stop loss. Of course, your entry is down here, right? Your stop loss should be way below here. You adjusted your stop loss to this low. Market did a pullback still, gave a new high. You adjusted your stop loss to this low. Just to keep following the stop loss. Market gave another new high, came to another low, moved. You adjusted your stop loss. That's how you keep tracking, following your stop loss until you hit whatever profit target you're looking for, right? But it needs to be very, very smart. Then there is a manual trading, just like what MT4 allows you to do. But there are some platforms you use, like Mash Trader. Mash Trader is another platform to trade aside from MT4. Mash Trader has an automatic trading stop loss, right? You can just set it, keep stop loss either, I don't know, I've forgotten the mechanics basically, right? Use a particular, just keep trailing, right? It's automatically trail the stop loss for you, right? The other platform, my MT5, MT4, MT5 doesn't really have that, right? So, another thing, only trail after a confirmation. There is no rush. Only trail is stop loss after a confirmation. Now, some mistakes we do is trailing too aggressively. Right? When you trade too aggressively, that's not really advisable. Right? When you trade too aggressively, that's not advisable. Right? There's also partials, right? Taking partials. Right? Once the market have moved, let's say at 1:1 RR, you have to just take your partials, right? Of course, one, you can move your stop loss to break even, close at partials, right? So you enter that 0.1 loss size, you can close. MT5 has that. If you want to close, you can choose the amount of loss you want to close. With your 0.0, with your 0.1, yeah, you can choose to close 0.05 and leave 0.05 running, right? So you're taking part of what you've made. Generally, it reduces your overall profit anyway, but at least you have something in the bag first, right? So these are some things you need to put into consideration, right? Um, then of course, another set of partials is having like TP1, TP2. Your full move is your full TP. But you decide to, okay, once you divide your entries, let's say you're entering with 0.1 total, right? You divide your entry into two 0.05 trades. One will be halfway TP1, then the second will be TP2. Of course, once TP1 is hit, you set TP, you set the second trade at break even, leaving you risk free. Even if the trade doesn't go your way, you're already backed your profit. All right. So this is another way to set automatic partials. Understand? This is automatic partials. You need to have two trades running, right? Um, the main risk you want to risk, you split it into two, right? So if you, let's say this particular trade right now, you want to go in with 0.1 loss size. So instead of entering with 0.1, you enter with two 0.05, right? So first will be um, halfway, halfway the TP, basically. This is a 1:2 trade. 1:2 is basically um, right here. So once it gets to um, 8, 1:0 is what again? When it gets to 9:0, 9:0 is your 1:1. You close, that's the way your TP1 will be. Your TP1 automatically closes. Then, of course, you wait for your TP2, right? So, that's what it is, right? So, that's basically, I'm trying to, because my time is like fast spent, right? So, another thing is, well, I think I'll talk about this one on the next session. Now, the most important thing in all of this is to actually guide you, right, on how best to manage your trades. Yeah. You can have um 20 persons in a trading or in a signal group, right? Trades called out are like 10 trades, and those 10 trades, you're actually profitable. In those 20 persons, a few percentage is in drawdown. How are they in a drawdown with a high accuracy trade being called out? Some other sets are at break even. Some the profit they made are just there. Some other persons made good profits. Some other persons made way more than expected profits. They all depend on your risk management and your trade management. All right. So a good trade management actually ensures you stay in the game long enough. It's unwise. It's painful and unwise to have 2 points to your full TP and you allow the trade to still go back and take you out. I am, I'm talking to myself as well, right? Because it has happened to me multiple times. You have your full TP right here. The market got 2 points to your TP and still allowed it to take you back, right? You can, once it gets there and you're still waiting for full TP, you can close partials, right? And now wait. Close partials and now wait. You can even set break even, whatever it is you want to set. At least let the move not just go like that. All right. So that's it for today, family. I believe you got something. I believe I tell you honestly, I believe you got something. So this trade is back into our stop loss zone. So we'll see how it will run and let me see. The move is giving some kind of moves, well. Honestly. So anyway, sometimes some breakables can be so painful. I swear to God. So this is an amazing one. I hope you got value. So tomorrow we go again and have the best day. All right. Cheers and all the best, family. We hope. That's the thing. We just hope for the best. I swear to God. We just hope for the best. Right. Cheers.